What's goody? We're back again with what we're watching, and today we're talking about dividend stocks. You're watching Sekkider, and this is what we're watching for the week of November 23rd to the 27th. Just a reminder before we get started, these episodes are not meant to be treated as expert financial advice, but are meant instead to provide viewers with a better understanding of the less explored corners of our stock market. And before we get into it, I actually do want to say a quick thing about the theme of this week. In general, most of the bullish investors you'll find out there are generally willing to disregard dividends as a valuable feature of investing, particularly when you're considering people who mainly focus on investing in growth stocks that are meant to grow a lot in a short amount of time. Generally, dividends are just dinosaur shit to them. That's pretty fine with me, and I'm not going to debate the merits with regards to maximizing returns, but if you don't give a fuck about dividends, then feel free to skip this episode. But for the rest of you, let's get this done. The first company I want to talk about today is GS Home Shopping. GS Home Shopping isn't a young growth stock, nor is it a massively undervalued stock, but it does have a solid place as Korea's third largest home shopping network and a strong e-commerce space with GS Shop. In fact, with Corona keeping people at home currently, GS Home Shopping has seen their revenue grow in the first 3 quarters when compared to the same periods of 2019. But that's not why we're here. I stated at the top that we're going to talk about dividends, so let's take a look at theirs. Over the past 3 years, GS Home Shopping has grown their dividend by 1.5% while maintaining a dividend payout ratio of between 30 and 40% for each year. Thus, their dividend looks to be sustainable going forward. On top of that, they've recently announced a merger between their brand and GS Retail, with GS Retail to be the surviving entity. The merger aims to maintain a payout ratio of 40% going forward, so if your concern is the dividend, there's no need to stress on that front. While details are still scarce about the merger, their aim is to develop a streamlined and integrated online-offline shopping platform that capitalizes on GS Home Shopping's cash generation and GS Retail's business-to-business logistics. With regards to other numbers, their revenue and book value per share have gone up year on year, while their PER and PBRs have been shrinking, so there's a little bit of value to be had there, making GS Home Shopping very worthy of an evaluation if you're looking for a reliable cash flow-based asset going forward. Alright, up next I want to talk about KT&G. So KT&G may be one of the most stable dividend stocks out there in the Korean market. Their main industry is tobacco, and basically any Korean cigarette brand that you can think of is probably a KT&G brand, whether it be Esse, The One, Lamborghini, Raison, or This Plus, This as the brand in general. Its largest competitor in the country is Philip Morris International, or PMI, and they sell Mavius Marlboro. But KT&G is really a giant since they've never been surpassed by any other tobacco brand since foreign cigarette brands entered the market over 30 years ago. In fact, KT&G signed an agreement with PMI such that PMI will be distributing their heating elements on an international scale. The company's R&D is well ahead of the curve, so it would be safe to say that their moat is pretty substantial in my opinion. Simply based off their sales value in the past year, KT&G ranks as the 5th largest tobacco company in the world. To top all of this off, KT&G is ahead of the curve in terms of eco-friendly tobacco product production, with their Daejeon plant already powered by a 2 megawatt per hour solar power generation facility. But that's not what we're talking about today. We're talking about their dividends, so let's get with that. It's actually pretty amazing that KT&G's R&D is so strong, with them maintaining a dividend payout ratio of over 50% for the past 2 years and above 40% the year before. They've been growing their dividend yield over that time as well, and they've never reduced or cut their dividends either. With a good moat and a steady dividend, KT&G also seems to be a decent bet when looking for a reliable dividend stock in the Kospi. Now, there are a few other companies that deserve a good look for their dividend and earnings stability, so I'm going to rifle off a few and list their most recent yields and payout ratios. So you got POSCO, IBK, Hana Financial Group, Tusan, Sangyong Cement, Woody Financial, and Dongyang Life Insurance. Sangyong Cement recently underwent a massive capital reduction and has paused trading over the past week, so keep an eye out on them and see how that develops going forward. Alright, I hope that was helpful. If so, do me a favor and subscribe to the channel, like the video, and hit up the comment section with any div stocks that you're looking at recently. Corona cases are booming again right now, so if you don't have any good reason to go out, stay your ass at home. Take it easy.